This is part 2 of my Bitcoin-specific 2020 outlook as part of the What's Up Bitcoin series. Let's see what's up with hashrate, Bitcoin dominance, technical improvements and regulatory developments. And last but not least, my personal price prediction. Hello, I am Adriaan for Bitcoin for Beginners. Before we start, I want to ask you to pause the video here first to read our full disclaimer. We are going to talk a lot about price today as well, but of course this is not financial advice of any kind, only infotainment and personal opinions. Last episode of What's Up Bitcoin, we did part 1 of the 2020 outlook, where we looked into the Bitcoin halving and whether it might already have been priced in. To see that episode, it will be featured at the end of this video. Let's continue our outlook and dive directly in the next aspect, which is Bitcoin hashrate. Hashrate is a measure of the total computing power that is used to solve the Bitcoin proof-of-work consensus algorithm, which effectively secures the network from attacks. As the concept in Bitcoin works, the higher the hash rate, the less likely that a bad actor can succeed in attacking the network, as the cost would be too high or physically unlikely for an attack to succeed. In 2019, Bitcoin's price almost doubled, while its hash rate increased by 162% in the same year. The hash rate now is higher than it was around the all-time high of the Bitcoin price in 2017, while the price now is much lower, around $9,000 at the time of recording. This is also interesting because usually the hash rate follows price, but for this moment it seems to be the other way around. So the computation cost, represented in hash rate, seems to have risen faster than the price in 2019. Miners seem to have great confidence and high expectations of Bitcoin's future performance. So unless an extraordinary price increase occurs early on in 2020, after the halving in May, the mining subsidy will effectively be about 50% lower, which means a sudden shock in miners' revenue, while they still need to spend the same amount of computing power as the difficulty level does not immediately change. This means that inefficient miners might disappear from the industry because their operations become unsustainable. And a lower profitability for mining operations, combined with a potentially lagging Bitcoin price, it looks like hashrate is likely to stabilize or even pull back somewhat in 2020. Whenever the next bull market really hits off and is sustained, with a delay of a couple of months, the hash rate is then likely to increase again. In my 2019 overview video in December, we already concluded that in 2018 and 2019, Bitcoin dominance went back to normalized levels, currently between 65 and 70%. Potentially temporary alt seasons might be pulling back Bitcoin dominance occasionally, and it is certainly possible that individual alts or alts collectively will have their speculative rallies from time to time. But on a larger scale, I suspect Bitcoin to continue outperforming alts due to a lack of ultra-speculative drivers for the alt space, like the ICO bubble was in 2017. And if we see a Bitcoin halving rally, it is very likely that capital will flow primarily to Bitcoin, causing dominance to grow. In that scenario, it is still possible that the alt space grows as well, just not as fast as Bitcoin. This leads me to believe that a very probable result might be another increase of dominance to an even higher level, perhaps approaching 80%. A new overall alts frenzy may again occur when Bitcoin stabilizes after its next bull market peak. But as I don't expect this to happen earlier than 2021 for Bitcoin, a new alts frenzy, if any, would be expected even later than that. In 2019, most of the technological improvements occurred outside of the base layer in the form of first sidechains, such as Liquid for inter-exchange fund transfers and tokenization, and another sidechain called Rootstock, which can be described as Ethereum smart contracts on Bitcoin. And the second in the form of the second layer provided by the Lightning Network, which can be summarized as scalable microtransactions. In fact, SegWit in 2017 was the last significant soft fork upgrade for the main chain protocol. However, we do have an interesting outlook for 2020 protocol upgrades, for which a lot of significant progress has been made last year, which we hope to see coming to fruition this year. We will give a brief overview of these potential technical upgrades. Those are Taproot, including Schnorr signatures and TapScript, the Great Consensus Cleanup, the No Input class, Object Template Verify, and Drive Change. First of all, the Taproot upgrade. As said, this includes a cryptographic technology called Schnorr signatures. It enables combining all signatures of transaction inputs into one aggregated signature, while not revealing information about the inputs. Interesting about this specifically is that it apparently incentivizes the privacy-enhancing coin-join transactions. Taproot itself, among other things, can hide scripts in transactions, but showing them as regular transactions on the block explorer. This saves space in blocks, but also provides much better privacy, especially if scripts are used. TypeScript is the updating of Bitcoin's programming language script, which makes it possible to add a range of new features in the form of so-called opcodes. The exciting thing about these upgrades is the massive increase of privacy features and simultaneously adding scaling possibilities. Then the great consensus cleanup. This would remove some technical vulnerabilities from the protocol to make it more robust and making the work for developers easier. However, the potential objection is one out of principle. Some coins might become unspendable if any were using the far-edge technology features that are going to be removed. So this might turn out to be too controversial to be implemented. The no-input class is particularly interesting for Lightning Network because it is useful in case of bugs or honest mistakes that might happen in Lightning channels. This solution could prevent loss of all funds in a channel if such situations occur. Also, less backup data is needed for maintaining a channel. The Object Template Verify or CTV can help to increase efficiency during peak hours or periods of high fees. It splits a transaction into a higher fee sending part and a lower fee receiving part, both with an intermediary committance on the blockchain that ties the two together. Because the sending part has higher fees, it will have faster confirmation and be committed to the blockchain much faster so that the receiver can be sure that the funds eventually will be received, even though the receiving part may take longer to confirm due to its lower fees. And lastly, drive chains, which are quite similar to sidechains. However, with drive chains, the bridge between the drive chain and the main chain is secured by miners, and drive chains are also merge mined, which means that the same hash power securing the main chain also secures the drive chain. Also, this proposal is somewhat controversial, because it is argued that it puts relatively more power into the hands of miners, so we'll have to see what comes out of that. So far the overview of potential technical and protocol improvements that might be introduced in 2020. Whenever either one of these becomes actual reality, we will discuss them in more detail in other videos. Especially the Taproot upgrade, including Schnorr and TypeScript, is work that is already quite far in its progress and the least controversial, so most likely to be implemented, even in a matter of months. Personally, I am the most excited about this upgrade, because of the much needed privacy enrichments and scaling improvements, making Bitcoin fundamentally even more valuable. 2019 was a year of multiple government hearings related to upcoming cryptocurrency legislation, but also Libra made a huge impact towards regulators. In 2020, regulations will become more concrete and we can expect more scrutiny on the broader cryptocurrency industry. Also, centralized exchanges and platforms face more regulatory burdens, and as a consequence becoming more and more the law enforcement deputies, similar to what banks have become in the traditional finance sector. As indication, Kraken Exchange reported a 49% increase in law enforcement investigations. There is a risk of further attempts by individual governments to implement transaction limitations or even to require KYC for peer-to-peer Bitcoin. Some of such regulations have already gone in effect in the EU per January the 1st in the form of the EU 5th Anti-Money Laundering Directive, requiring crypto platforms and wallet providers to perform KYC. While all of that goes somewhat or entirely against the ethos upon which Bitcoin is built as a free market permissionless money, more regulatory acceptance and more clarity for markets in the form of inclusion into legislation can also be a good thing. It might, for example, finally pave the way towards the approval of a Bitcoin ETF. Another example of bringing more regulatory clarity for the market might be the US Cryptocurrency Act 2020, as is proposed as recent as last month. If this gets approved, it would among other things divide crypto assets into three categories. 1. Bitcoin and other non-securities, including stablecoins, smart contracts and oracles. 2. Crypto commodities, which include substantially fungible tokens residing on blockchains. And 3. Crypto securities, all other tokens failing the Howey test. Another potentially encouraging development is that Bitcoin options trading started early January on CME, which means yet another Bitcoin-related trading market in a regulatory compliant environment. Further growth of these regulatory compliant markets in numbers and scales, combined with a better inclusion of Bitcoin and cryptocurrencies into legislation, might make the SEC more comfortable that there are sufficient regulatory oversight capabilities, which until now has been of their main concerns. This might eventually pave the way towards more positive news around the ETF approval process, maybe as early as end of 2020 is my conservative estimation. For the record, I don't expect the actual approval to happen in 2020, but potential announcement of larger steps into the right direction. Actual approval and/or launch is perhaps more likely in 2021. Alright, on to my personal fun prediction for Bitcoin for the end of 2020. Of course, this is just a random educated guess from a guy on YouTube, keep that in mind. 2019 ended with a 94% increase at 7,168. The trend line that I had drawn in my 2019 overview video is so far still intact, which means that this upward channel can still be formed. At least in January we have finally broken out of this long downtrend channel and are still staying above it. As long as this support trend line holds, while I am expecting the price to stay within this hypothetical channel, and if this trend line gets broken to the upside, which will be further bullish confirmation, but then automatically staying within the hypothetical channel, the price won't be breaking the current 19,800 all-time high yet in 2020. And the price range then would be between 10,350 and 19,250 at the end of the year. I personally expect the price to rise 110 to 150% for the year 2020, which would be a similar increase to other halving years, which puts my price projection end of 2020 somewhere between 15,000 and 18,000. So I personally expect Bitcoin's real fireworks to start not sooner than 2021, but keep in mind that Bitcoin can catch everybody off guard at any time. If we however don't break this bearish trend line early enough in the year, or even break this bullish trend line to the downside, we might still make lower lows, and then my outlook for end of 2020 would be much less optimistic. In such case, I expect Bitcoin to end 2020 more in the neighborhood of 10,000. 2020 seems like the year for accumulation of Bitcoin before its big breakout bull market, if and when that finally might occur. Although this is not investment advice, but dollar cost averaging, in my humble opinion, seems again like my personal favorite strategy in 2020 as well. Either way, I wish all of you a lot of wisdom for 2020 with whatever Bitcoin strategy you choose. And remember to never invest more than you can afford to lose. I hope you enjoyed this episode, and if you did, don't forget to give it a like. If you want to see more episodes of this series What's Up Bitcoin, subscribe to our channel to follow all the new episodes. Looking forward to see you all back soon for the next one. Take care.